This is the briefing for Wednesday, September 20th. Well, the Fed meeting is over. There was not as much volatility as I had anticipated there would be. But in any event, we have traded through and closed below very important support levels. Now, I want to be very direct in this analysis. Now, if you've been listening to these briefings for the past couple weeks, and I say this at every briefing because I have to speak to people who may not have been a subscriber 2 weeks ago but are subscribers today, is that we were looking at this as being this as being a three-step counter trend rotation where there was equality between legs 1 and 3. And we know that there was like 3 or 4 different fractal natures of that in this move right here. And that would project the leg 3 coming down to about the 426 area, 427 area, where there would be equality at that point in time, which would break through the 430 area. Now, the important aspect here is that if that analysis is not correct, then the other probability was that this is just simply a rotational pattern where we traded from 430 up to 459 and then back down to 430, and then we're going back to 459 again and potentially back down to 430. So we just had this rotational period. The third possibility, and I covered this I think in 2 briefings, and I may have mentioned it in this last weekend's briefing, that based on other tools that I have learned over probably 25 years of trading, that this pattern here has a bearish nature to it. Now, I say that, and we can look at a head and shoulders top or a head and shoulders bottom or a rounded cup or a cup and handle, different patterns like that, but they are never that pattern until it's after it's over. So while this appears to be a very bearish pattern, having broken through this area right through here, having broken through the low of last Friday, gives that possibility a little bit greater chance of coming true. Now, when I say that, I want to be cautious on it, but I can tell you this, that if we were to break 430, and if we do that and volume is increasing, which it increased in today's trading, then that would suggest that this 3-step counter trend move is potentially negated and that we are in a new trend to the downside that would suggest testing one of these lower support levels that we have reached at least at this point in time, or that we will reach at some point in time. Breadth fell off pretty dramatically. This is S&P breadth, only 500 shares, so we were 150 negative, and it did not really suggest that we were going to see a dramatic move to the downside, but certainly we closed at the low of the day, and that suggests that potentially the market would have continued lower today if it hadn't closed at 4 o'clock Eastern time. So basically, this bearish pattern that I've identified, and I can probably talk about that in some trade lesson or something at some point in time in the future. But this is just from experience. Now, I said that I had a small short position on coming into today, and I took some of that off yesterday right at the low. I still have a small percentage on, a small position on, and I added just slightly to that because sometimes we see a move either to the upside or the downside after a Fed meeting and after the press conference, and then the next day traders reverse themselves. So I want to be cautious. 445 in the spiders is upside resistance. That is very, very important area. It's been an important area for quite some time, going all the way back to June 14th, June 15th of this year. So that area is just very, very important. Now, it would not surprise me when we do have a breakout, and you can see we did have a pause here. We do have a breakout from an area of rotation like that. It is common for the market to retest the breakout and then accelerate in the direction of the main trend, which would be to the downside in this case. So we still have some possibilities out there that we're not ready to thrust lower with impulsiveness. But we really need to be watching what happens with especially volume. If volume is increasing on any move to the downside over the previous day's volume, then that would suggest that it is becoming impulsive, and certainly we want to be cautious of that. Now, 52-week highs minus 52-week lows ticked up slightly, but it's still at a fairly negative rate. Now, you can even look here. This is where we were in yesterday's trading, and you can look all the way back through here that we really, only going back to about March 13th, did we reach lower, and then again on May 4th did we reach a lower point than it is at this point in time. Now in the NASDAQ, it's basically the same situation. You can see the area of rotation right through here. We broke through that at 373, closed at the low of the day. Next level of support comes in at 357, 356, and where there's equality comes in at 347, 348. And then below that, we're looking at about the 323 area, 324 area in the Qs. You can see volume ticked up. Breadth was fairly negative. Now really, I would have, if we had seen breadth at 26, 27, 2,800 shares negative, that would have suggested to me that this potentially is an exhaustive move. But certainly we have the potential to see breadth decline even more in tomorrow's trading, and to potentially see volume increasing as well. Now, the Russell gave a pretty good clue in today's trading. You can see a little bit different chart pattern. You can see this move potentially as a leg 1, a leg 2, and leg 3 would project down to the 175 area. And now support comes in right through here, and you can see that's the upper extreme of this area of rotation, this low, potentially this low. And of course, we close right at it, right at the 170 or 189, 180 area. Equality comes in at 175. But once again, I'm leaning more towards the fact now that potentially we're looking at a very bearish pattern, as I discussed with the spiders and the Qs, and that potentially that could get traded through. Volume ticked up in the Russell, or I should say the IWM, and of course breadth was fairly negative and not extremely so. So that just gives me a little bit more of an indication that potentially we could see a pause tomorrow or some type of rotation back up. But if we do accelerate and we open and close below today's low, what happens with the market internals going into Friday's trading is going to be very, very important. And then of course, in terms of overbought and oversold, we are neutral. Really in the NYSE and in the NASDAQ. So that gives us the opportunity of potentially seeing an additional move to the downside in tomorrow's trading. In terms of volume, volume in the NYSE ticked down slightly. This is total volume in the NYSE. So it is at an average low, as you can see. And then of course it ticked up slightly in the NASDAQ. So in summary, this potentially has a very bearish pattern to it. The probability of that not happening decreased in today's trading. Now, again, as I said earlier, the perception of value can be changed overnight after a Fed meeting, and we've seen that. We've seen a market move in one direction at the day of the Fed announcement and then completely reverse itself the next day. So I want to be cautious in this briefing, and I'm cautious with my own account in that I added slightly to a very, very small position I had to the short side today, and I want to see what happens tomorrow before I start jumping in with both feet. But in any event, watch 445 to the upside. It should not be traded through or closed above in tomorrow or Friday's trading. In the NASDAQ, watch this 373 area. The same thing with that, should not be traded through or closed above. And then in the Russell, watch what happens basically at 190. That's a pretty good distance away. But the Russell should not look back at 190 again, especially having closed below 180 or closing right at it. And you can see we closed just slightly below it. Tomorrow will be a very, very important day. And if this scenario plays out, where I expect that this is looking at a very bearish pattern, chart pattern, then we will begin to see these lower levels taken out, and the internals will begin to give us support in that as more and more people start to move to the sidelines or start to get out of the market to protect their positions at this point in time. Have a great night. We'll pick this back up tomorrow.